Okay, we are live. Um, Welcome to the Timing Research web show for September 22nd, 2014. Last night's report was the 52nd weekly report for for the Timing Research Crowd Forecast newsletter. So I want to thank everyone who's contributed and followed the reports for the last year. And so this is actually also the 5th week of the web show. And um, so my name is David Kosmider. I'm the creator of Timing Research, and if you are new to Timing Research, we are building a crowd a crowdsourced sentiment indicator. Each week, I send a quick 5-question survey to all subscribers, and we have about 2,800 active subscribers now. And so the weekly survey gauges everyone's current thoughts and about the market and near-term prospects. And then I assemble that data and publish a report every Sunday afternoon. So also I want to say I've activated the Q&A function for this Hangout. And if you have any questions for me or the guests throughout the show, just type them in and we'll answer them at the end. So I have 2 guests with me today. I have James Ramelli of KeenOnTheMarket.com, and I also have Glenn Thompson from PacificTradingAcademy.com. So, James, if you could tell us a little bit about yourself.
Sure thing. So, like David said, my name is James Ramelli. I'm of KeenOnTheMarket.com, and I am an options trader and educator here at KOTM. What I do is I moderate our live trading room where every day during market hours we show our subscribers and customers what our trade setups look like, what it is we're trading, and what it is that we are looking at on the screen. Like I said, I trade equity options, currency pairs, commodities, stocks actively every single day. Some of you guys might know me. I've been on Bloomberg TV, BNN, SIBO TV, and CNBC pretty regularly, a couple times a week. And I also write for a couple of different financial media publications, CME Open Markets, Active Trader, and Futures Magazine. So my area of expertise is equity options, but we trade a lot of different markets here at KOTM as well.
Okay, great, thank you. And Glenn, let's hear about you.
Sure. Thank you, David. Again, Glenn Thompson, and currently, and actually for the last 12 plus years, I've been a trader slash mentor with the folks at Pacific Trading Academy, as you indicated. I actually started my career at about 24 years old, so that's about 30 plus years ago. Mostly, I started actually literally on Wall Street as a securities broker. Kind of got into the industry by default or accident. But fast forwarding to the present, I have been a trader for about 25 years, primarily a technician. My area of research and focus and expertise, I guess, would be in market timing. And the markets that I'm primarily trading are the stock index, the E-mini, and Forex pairs in terms of my own accounts. Insofar as my teaching and instruction and mentoring, I pretty much cover the entire investment spectrum. I've traded options on all underlying assets and instruments pretty much. But again, I've narrowed my particular personal niche down to the E-mini and Forex primarily. But again, I would say my area of focus is in market timing. And then I utilize pretty much the standard generic fare of indicators, but starting with trying to develop or generate a viewpoint focused on market timing points or time markers, and then looking to see where alignments or correlations would arise with price activity. So that's what I do in terms of the analytical part of my research. As far as my teaching, what I attempt to do and have been pretty successful over the years is tailor curriculum to the individual trader coming into the program. So that's kind of a brief overview of what I do, if that helps.
Okay, sounds good.
Great.
Thank you guys for being here this week. And I'm going to go ahead and share my screen so we can get into the report. And for those of you watching, if you haven't seen this report yet, you can download it at TimingResearch.com/reports. And as I mentioned, this is the 50-second report, weekly report. And so page 1 of the report always covers questions 2 and 3, which are the multiple choice questions, the main part of this project. So this last week, we had about 70 people respond, and 56.7 predicted higher for this week. The question was based on any technical or fundamental indicators that you want to use. Would you guess that the S&P 500 index will move higher or lower next week? So that's from Monday's open to Friday's close, September 22nd to 26th. So 56.7% guessed higher, and 43.3% guessed lower. So let's start with you, James. What would your guess be for this week?
My guess would be higher, but as we're looking at the markets trade today, we're seeing S&P futures down about 16.5 points here. We're already staging a little bit of a rally off of the lows, but it's going to be difficult for the market to snap back all of these losses from today throughout the rest of the week, especially because we're looking at a pretty thin week in terms of macro data and catalysts. We're in a week where historically, if we look at the Trader's Almanac, this isn't a great week for markets, and it hasn't been going all the way back to the early 50s. But, we're in a spot right now that I call kind of a no man's land, where we're in a place where we don't have a lot of macro data. We're kind of at the tail end of earnings season. There's not a whole lot of catalysts coming out. So, the market just might kind of chop around for the rest of the week, given the price action that we've had today, because there isn't really going to be a big macro data point that's going to be able to bring us back here. Generally, we look to see market makers pricing in around an 18-point move throughout the course of the week, and we've played out pretty much all of that today. If we look to see what they're pricing in now, the options market is implying that we still have another 20 points to the upside or downside throughout this week. So I think if we get that upside move, it'll bring us right up back to about even on the week, and that seems to be what would be a little more typical of the price action we've seen recently.
Okay, so you're guessing higher, and Glenn, what would your guess or prediction be for the week, higher or lower?
Yeah, sure. I happen to agree with James, but I want to provide some complementary data that creates my view. Curiously enough, today of all days happens obviously is the autumnal equinox. Financial markets in general, especially the indices and interest rate markets, tend to shift and adjust their mode of behavior on or around our calendar quarter periods, and today is the equinox. So prior to last week, at the end of last week, I was getting some of the people that I consult long the market. I expect we may have another session or two of declining prices to find a zone of support. When I last turned off my screen, we were around 85. We may have moved up from that. I'm having technical problems, but the December contract in the S&P was around 1985. We may have bounced up a little bit from that. My best guesstimate at this point is we may have another day or two of falling prices. My overall projection is for the market to move into a zone of support, not much lower than the current levels, and by the end of the week might be much higher. My immediate zone of overhead resistance is 2020, basis the December contract. So again, I'm bullish the market. We break out above 2020, the next zone is 2036 that I projected of resistance. So overall, long term, I'm expecting additional continued appreciation in the index. My next major time point for the broader U.S. equity market is October 11th. So overall, I expect markets, the stock market in general, to trend higher between now and that October 11 period. I think the 11th comes in on a Saturday, so figure the following Monday. And then I expect what could be a top. top for a correction, not the end of the bull market. I project the bull market will last for at least another 6 to 8 months. But for short term, again, this week, I could see conceivably, given today's action, again, a little further decline for another, but not more than for another session or two, half of which I expect the market to surge forward. The next zone of resistance, again, being around the 2020 area.
Okay, thank you. So both James and Glenn agree with the overall sentiment from the surveys for higher for this week. And so question 3 is for rating confidence. The average of all guesses for this week was 6.299. And the average, the question is rate your confidence in your answer to question 2 on a scale from 0 to 10. 10 being, or 0 being no confidence and 10 being extremely confident. So yeah, the average of all guesses is about 6.3, with the lower guesses being about half a point higher on average than the higher guesses. So slightly more confidence on the lower side. So James, what would you put your confidence level at in your guess?
Right, so I would say it's probably somewhere around a 7, and the only reason that it's not higher is because, like I said, when we're kind of in this no man's land with no big macro data points, markets tend to trade a little bit thinner volume-wise, and it's easier for black swan or kind of out of the ordinary type events to break any pushes higher. And we have a lot of headline risk right now. There's a lot of situations developing, geopolitical things that could definitely surprise us and send this market lower this week. And with no corporate earnings, with no economic data coming out to help boost that market should one of those events happen, it can be very easy for the market to fail on any pushes higher. However, we are seeing market makers imply a larger than expected move. So we do have 1 or 2 smaller data points this week, new home sales. That's a part of the economy that we've been looking for positive data for for a while now. So I think if we get a good new home sales number on Wednesday, we could definitely see a push higher in the broader market. In the equity options space, we've seen a lot of bullish activity in home builders from institutional players, which would tell us that institutional money is expecting that sector of the market to push higher. So that lines up pretty well with the few data points that we do have this week. So I think that could provide us with that leg higher. But like I said, the only reason I'm not more confident is because there is that headline risk, especially in a thinly traded market like we're going to have this week.
All right. And Glenn, you said higher as well. And what would you rate your confidence at?
Here again, I would peg it numerically pretty much the same as James. So we're in synchrony on that, but for different reasons. And I agree and am cognizant of pretty much the fundamental factors that James was alluding to. My big a caveat in terms of why I would not assign it a number greater than, say, about 7, is the 1996 number basis that December E-mini represents pretty much a near perfect square out to the low in March of 09. So depending on where the market is in the next 2 sessions relative to that 1996, if we're above it, that again suggests up, and away. If we're below it, then that would alter my forecast. So I'm going to give it a 7, but again, it's more due to that technical, which in this case, this is more or less a GAN consideration. And I think in general, the best of all worlds is when I see a set of factors fundamental in the world occurring that pretty much are facilitating a technical view that I've derived. In this case, my primary caveat being when the market last week was resident with that 1996 area, I realized that's pretty much, it was that amount of days since that significant bottom that came in March of 09, marking the end of what many people consider the generic bear market. completed. So we are at a critical juncture. Depending on how the market responds and the degree of sensitivity to the news that comes out in the next week or two is going to determine the longer-term trajectory that I think we move in. Again, I would place a slight bias of preferred directional movement to the upside. However, if by, say, Wednesday of this week, we're not trading again above that 1996 number, that would bode, that would seriously adjust and suggest I ought to alter my view towards adopting at least a temporarily bearish vantage point. But for the moment, I would say about a 7 in confidence in terms of expecting appreciation. I think the primary technical factor I would cite as facilitating the pullback we're seeing today is the fact that it's perfectly coincident with the quarterly calendar, the equinox. And we often see this year in and year out. But I would give it a 7.
Okay. So higher for both James and Glenn, and 7 for confidence. So
yes.
So let's move on down through the report here. The bottom of page 1 always shows the full history of the past data. And you can also download all the past data at TimingResearch.com/raw data. Page 2 of the report shows the numerical values for the entire history. And also, a feature I'm going to be adding soon is a forecast. Now that I have a year worth of data to look at, I've been identifying certain situations where the indicator is more accurate, or can get more data from. So that's a feature that will be added to future reports soon, is a forecast based on the particular data of each week. So watch for that in the future. Page 3 of the report starts with the open-ended questions. Question 1 always asks, what developing events, technical or fundamental, will you be watching out for next week, September 22nd through 26th, that might have a positive or negative impact on the S&P 500 and other U.S. markets? So, James, do you have anything else that you'll be watching this week?
Right, so absolutely, like I said, I'll have my eye on the new home sales number on Wednesday. That comes out at 10 o'clock Eastern time. Like I said, there's been a lot of bullish activity in the equity options market, a lot of money flow from institutional players coming into home builders. So it looks like that is who institutional money is expecting to lead the next leg higher in the market, or at least that sector. So, if I don't see data come in strong for that, I can start to get a little bit more worried about where the broader market is, because that's where all the money is setting up right now. Like I said, there's a lot of the headline risks that I talked about setting up here. I'm not as much of a technical trader as Glenn is. I try and focus more on price action and fundamentals, but all of these geopolitical events that we have here could represent risk points for this market. Technically as well, one of the main indicators that I use is called the Ichimoku cloud, and today we're beginning to test a key level on that indicator as well, and that is right around this 1980 to 1983 level in the December S&P futures. So a break of that to the downside could make it difficult for the market to rally this week, especially because we haven't seen the S&P futures trade below that level in quite some time here, and the last time that they did trade below that level was several months ago, and they sold off pretty hard. That was towards the end of July into the beginning of August. But once we saw that break happen, they did bottom out and stage a pretty strong rally to new highs. So those are all events that I'm going to be having on the front of my mind here. I'm going to be keeping an eye on European markets overnight as well, as they've been tending to lead pretty well how we're going to open here in the U.S. We saw a lot of pressure in Europe overnight, and that showed to a pretty tough open this morning. So those are all things that I'm going to have on my mind going forward this week. Unfortunately, there's more risk of negative news than there is of positive news because we don't have, like I said, we don't have the macro data this week that can support the market if it comes in strong. Aside from that housing number on Wednesday, and then we do have GDP on Friday, which hopefully should be pretty good.
Okay, great. I lost connection there for a second, but you guys can hear me. Glenn, did you have
Sure.
any other things you're watching this week?
Well, pretty much, I maintain more or less just a peripheral awareness of the points that James was mentioning, and so yeah, I'm coming in certainly with a technical bias, which would, and James is more keeping abreast of event by event from a fundamental perspective. It's complementary. I think the best of all analyses represents a confluence or an alignment between different sources of information of types. But again, I don't keep track of that intensively the way I did. Ironically, I started my career as a fundamentalist and then just began to more specifically focus on the technical components of market behavior. But pretty much I'm aware, again, in a peripheral sense, of the items that James was mentioning, and I would agree in his assessment. I wasn't aware of the Ichimoku status, so that makes sense, and it also jives with my next projected zone of underlying support around 1978. So specifically, again, basis the December E-mini, let's see how the market responds to that 1978 number. That's a number that I think is critical. Depending on how the market's response is, given the the events occurring Wednesday and Friday, those two reports that James alluded to, I think will be critical and will shape my expectations going into the end of the week. So 1978 is the number. If we break down below that and persist moving lower, 1960 is the next zone of underlying support that I've projected of significance. I don't think that will happen vis-a-vis the comments I made earlier. I think we're moving upward, but I could be wrong. Again, I mentioned about a 7% confidence in my expectation for higher prices. We break down below 1978 basis the December E-mini, and 1960 is the next level. So let's see. I don't think that will happen, so I think the particular reports fundamentally that are scheduled later in the week on Wednesday and Friday in particular will be telling. So more or less my approach is to formulate, again, as I mentioned, a view combining pretty much my timing, then I'll look to see a wave count, let's say, that might agree with that. And then once I've projected what I think technically what will occur, I look to see the types of events fundamentally that are occurring in the news that's being released to see if it would augur for or be contrary to. So more or less, yeah, I would just echo what James is saying there as far as the events scheduled for this week. With the only, the thing I'm just saying, 1978 I think is a critical zone of price. Depending on how the market responds to that, I think might be a bellwether or a harbinger of what to expect for the remainder of the week.
Okay. Great. Well, thank you guys both. That's a lot of good information there. So let's move on to question 4. Is different each week. It asks about current events or various things related to trading or investing. So this week, the question is, if Hillary Clinton runs for president in 2016, do you think she will win? If she wins, do you think she will do a good job as president? And I went through and quantified the results of what people said in the open-ended question. And for the first part, if Hillary Clinton runs for president in 2016, do you think she will win? 41.5% said yes. 58.5% said no. And if she wins, do you think she'll do a good job? Almost 41% said yes. A little over 59% said no. So, what do you guys think, James? What are your opinions on those?
Right, so I think if she does run in 2016, she probably will have a relatively easy time of winning it. I don't really think the Republicans have a very strong and viable candidate, with as much star power as she has to run against her. She has a lot of assets in, um, her husband Bill Clinton is a very big asset to her. And if we just look at, I like to look at the finances behind campaigns as well. I mean, we saw that Obama got a huge lead against Romney in terms of raising money early on, and it allowed him to campaign very strongly against Romney during the Republican primary. I mean, she's not going to have to uh, run a tough primary race like the Republican nominee is going to, and it's going to let her use the money that they already have in her campaign um, to get those strong ads out there right early on, and that proved to be a huge benefit for Obama. And I think it's going to be very similar way for this next race to play out for her. And I really think that there's a lot of key voting blocks that really she are hers to lose. The GOP doesn't have a whole lot of very strong arguments against Hillary either. So, in terms of how I think she's going to do as a president, really my main concern is what it means for the stock market. If she gonna do a good job to support equity markets? I mean, that kind of remains to be seen. I don't really know if any president over the last couple of terms has done a great job of doing that. I mean, I'm sure it's obvious that certain policies that were put in place under these presidents have been good for equity markets, maybe not in the long-term view of things, but definitely in the short term. So I think that that my answer to the second question is a little bit difficult.
Yeah, that one's very subjective, but thank you. And Glenn, what are your thoughts about this?
This is a toughie. I wish I had reviewed these questions before. I'm way out of my proverbial element, so to speak. But I'll tell you my my instinctual responses here. I tend to agree with James again. I think a focus would be on the finances, and I actually am not aware, but from what I do, again, have an awareness of, I think that would put her in a good position. Also juxtaposed to my awareness of what's going on the Republican side, I see a state of overall disorganization. I think the primary obstacle in terms, again, of what I'm aware, and I don't stay abreast of political events and the nuances of such in the way that I used to, 15, 20 years ago, but again, just as a general observational response, my thought would be what I'm aware of. I think Hillary and her cohorts have already begun to take steps to get in front of proactively the Benghazi situation or scandal or however we want to think of it or conceptualize of it. And I think that would be a primary major obstacle to her winning the White House the next time around. And I think to the extent that they can mitigate and offset that will pretty much, again, barring unforeseen events that that would work and augur favorably for the Republican side, I just don't see any of the candidates out there waging a meaningful anything that would stall her momentum and inertia. But again, the only, to the extent they can make a big deal out of Benghazi, and to the extent that her campaign is not able to offset that, they may, Republican or the conservative ticket may develop some traction that could offset it. Of course, things also depend on where the market is at that point. I think Americans in general are impatient, and we're impulsive, and to the extent we are unsatisfied collectively, we may rebel. But that being said, barring some nonlinear black swan type of event that James alluded to earlier, given the probabilities, the smart money, I think, would go with Hillary winning next time around. In terms of her competency, I think I give her high marks. And that's apart from any particular ideology. I think just intrinsically she's capable. And I think she's got the experience of her husband to back her. So, the cliche of 2 for 1, regardless of what one thinks ideologically of her particular views. So that would be my best thought.
Okay, great. Yeah, I was surprised at how close it was actually. Based on previous questions I've run, it's been much more, I guess, pro-Republican than. So I was expecting more of that, but do you guys watch the like any of the prediction markets, like Iowa electronics market?
In-trade, yeah.
Yeah, InTrade. I think InTrade has actually stopped running now, but
Have they really?
I think they switched to just like just for sports betting. But yeah, for each presidential election, I like to watch the Iowa electronics markets or Iowa electronic markets. They're like perfectly accurate every time, pretty much. But the presidential race hasn't started trading yet, so but that'll be another interesting thing to watch. So, um, but did either of you have any other comments you'd like to share for the week?
Well, David, again, if is that, or have we run to the end of our questions or thoughts or?
Yeah, pretty much.
Yeah. If we do this again, I certainly will make a point of reviewing the questions beforehand. But hopefully, I've been able to give you some off the top of my head comments in regard. And I think the forum is great. I like the mixture of questions, and certainly I will start watching some of the polls such as this that are presented. In terms of the last question, do I watch any of these polls? Politically, I will, as we get closer to the election, I'll start paying attention. Again, being a technician, I tend to want to purposely kind of put myself in that proverbial closet and try and just come up with as technical a view as I can. And then once I feel confident in a particular view, then that enables me to kind of know which direction to tilt my ear, figuratively speaking, to the proverbial fundamental wind, so to speak, to figure out what type of events are occurring that would be consistent and serve to bring about or facilitate what the technicals are telling me are most probable trajectories for price action to occur. That's the longer term. Intraday, I day trade the E-mini and pretty much any market, because from the purest part of my brain is these things are lines on a screen, whether I'm trading a Forex pair or an E-mini or a soybean. I was in a meeting years ago and someone said, I don't care if I'm trading soybeans or jelly beans, I just want to make money to make the point. So it depends. I look at all time domains, whether it's a short-term, very short-term from an intraday trading standpoint, also to the position trade, and all the way to the longer-term, much longer-term investment domain of or time envelope or window perspective. But again, for the purpose of a forum such as this, I'll make a point if I know in advance specifically the tenor and nature of the questions, for example, to kind of get up on what's going on fundamentally a little more in detail, so I can provide some worthwhile input as well. But again, I applaud you for the forum. I think it's a worthy discussion.
Okay. And for everyone who's watching, be sure to go to TimingResearch.com/current survey sometime this week before Sunday to fill out this week's survey. The new question for the week, question number 4, will be Alibaba's group's IPO debuted on Friday at $68 and quickly jumped over 40% in its first day of trading. And where do you think the stock price will end up after 1 year of trading? So go fill out the new survey for the week. And have you guys been watching the Alibaba IPO at all?
I'm
Yes.
aware of it peripherally.
Okay.
Yeah.
Okay. Well, my guests for this week have been James Ramelli of KeenOnTheMarket.com and Glenn Thompson of PacificTradingAcademy.com. So thank you guys for being on, and thank you everyone again for 52 weeks of filling out the surveys, and that's it for this week. Thanks.
Thank you very much, David.
Thank you. Thanks again.
Thanks. Bye.
Bye.